Let's get a better sense on the insurance bill that we had seen get tabled in the Parliament on Friday. A little bit detail about this bill. The Cabinet has approved insurance amendment bill that now raises the foreign direct investment in insurance in India from 74% earlier to 100% now. And this is going to be introduced in the winter session of the Parliament, which means anytime this week. What implications could this have on the existing insurance players in the market? What impact could it have on financials? And more importantly, what kind of move this could lead to when it comes to insurance penetration in India and that dream of insurance for all by 2047. Let's get a better sense on all of these questions. We have Mr. Mayank Batwal, the CEO at Aditya Birla Health Insurance, joining us on the show. Mayank, hi, morning, and thanks so much for your time. Give us a sense of what is your first take on this amendment that's come in, now raising FDI from 74 to 100%. Does this open up more room for more global investors to set foot into India, or is this merely an increase in the amount of stake that existing global players hold already?
Yeah, good morning. I think, clearly when the finance minister announced this in the budget earlier this year, this was, expected. And, I'm glad that it is finally going to move in this parliament session and get cleared. Our view is that, in a market like India, where the opportunity is so large and the penetration levels are so low, I think more players coming in, more competition is only good for the overall market, including the existing players, because every new player which comes in will probably bring in some innovation in product, in distribution, and service, etc., in technology. And so, I think it's not going to be just the existing players getting more capital. I think newer players will come in. We know that there are some players who have expressed interest in coming in, having much larger stake, probably up to 100%. There are many, many global players today which are not present in India. So I think overall, this will be expansion of the current market with more capital coming in the insurance sector in India, is my early view at this point of time.
Mike, how do you look at this composite license, which is also part of the bill? Does it open up newer areas for you? Will you be, going directly there to the health insurance or the life side part of it?
See, I think, the details of the composite license, regime is still to be, out. But from whatever we understood, I think there are two parts to the composite license. The way it at least initially it was being assessed. One is you can get into any of the other categories of license. There'll be no, business line specific license. The other one is there are what I call micro licenses. You can pick up licenses in smaller category. For example, if someone wants to get into health, you can just pick the indemnities. If you can pick only fixed benefit, you want to get into life, you can pick up only annuity or savings or protection. I think which will give in a lot of operational opportunity to different players in the market today. And as I said earlier, I think in a highly underpenetrated market like India, all of this is only going to increase the coverage and including giving opportunities to all the existing players to explore where would they like to get in, given how the new regime seems to be moving towards.
Hi Mayank, morning, this is Harsha. Mayank, what does this do for existing players in terms of pricing? And I'm being very direct here. There's going to be FI participation very likely. How quickly does that come in? How quickly does that start to impact both pricing and profitability for you?
See, we have had, even in the last few years, more players coming in, Harsh, including, let's say the GI companies becoming more, focused on health insurance. I don't think so it's impacted the pricing, because everyone knows that I'm talking, let's say, of health insurance. Everyone understands that this is a long-term play, and cutting price just for the sake of, competition is not the right thing to do, because at some point of time it will catch up. I think more important is that can you bring in innovation in the product space? There are many, many, many white spaces there today. If the size of the volume increases, and let's say the category is able to get better pricing from the healthcare side, and that leads to a lower pricing overall because of the larger penetration and a bigger part of the healthcare expenditure being covered by insurance, that is what is the right way to reduce the price. The other thing is, can new distribution models emerge because of innovation coming in, which will bring down the cost of distribution, and will that flow through in form of better pricing for consumers? I think those are the ways of looking at it in terms of more sustainable improvement in pricing and making it more affordable.
You have any idea on whether open architecture is allowed as part of this bill, because that opens up a lot of avenues for existing players, to tap the legacy players base of distribution?
I think it's not very clear right now, based on whatever has been announced so far. It was there in the earlier proposal. At this point of time, whether open architecture will come or not, I think we'll have to wait and see the exact details. What has clearly come in the documents so far released is that, one is lifetime, a distribution license, which is very good. So you don't have, as distributors, they'll not have to go back and renew their licenses regularly, as long as they're doing the right stuff. And the second one is, generally there's a note on increasing distribution, bringing in newer forms of distribution. So we'll have to wait and see. But I think there's a clear focus at both the government and the authority level to open up distribution, because that is one way to increase penetration.
Okay, Mayank, we'll leave it at that. Thank you so much for joining us, giving us that perspective. Of course, insurance will be one sector which will be in focus. But what Mayank seems to be indicating is that this is going to be a slightly medium-term play out rather than something that we can expect an immediate knee-jerk reaction on. So we'll wait and watch as to how that plays out and how this entire space evolves.